Hello and welcome to this Maritime London webinar. I'm Joss Standerwick, Chief Executive of Maritime London, and I'll be moderating today's session. I very much hope that this will be the first in a series of webinars with our colleagues from the Office of Financial Sanctions Implementation, or OFSI, and the Department for Transport, as well as other UK government departments, as we analyse what is a fast-changing sanctions environment and the role of the UK within it. There is no doubt that in the last couple of years, international shipping has increasingly come under the spotlight of OFAC as the US Sanctions Agency extends its breadth beyond its traditional remit of financial transactions. This has manifested itself in a number of advisories, the most recent being issued in May this year. Hot on the heels of the OFAC advisory came the OFSI shipping advisory issued on the 27th of July. The first time the UK Sanctions Agency has explicitly focused on the UK's shipping industry. While there are practical differences in the advisories, I think the message from both the UK and US is clear. The shipping industry must take note and implement extensive KYC processes to ensure stakeholders are not exposed to counterparties potentially involved in sanctions evasion. To discuss the OFSI advisory, how the market has reacted, and the wider sanctions environment, I have been joined today by a great panel from both government and industry. First, we have FREYA Page, Head of Guidance and Engagement at OFSI, part of Her Majesty's Treasury, who will be providing a presentation on why does the UK need an independent maritime guidance, what does the guidance cover, and how does the guidance support the industry. Then Mark HOLLELEY, Transport Sanctions Policy Lead at the Department for Transport, who will be providing an overview of UK transport sanctions policy and the work that the DFT is doing in support of the shipping advisory. We'll then be joined for a panel discussion by Simon Lockwood, Deputy Managing Director, Shipowners and Special Risks at Willis and LIIBA Marine Committee Chair. Daniel Martin, Partner and Sanctions Specialist at HFW. And last but not least, Mike Salthouse, Global Director of Claims at the North Group and Chair of the International Group Sanctions Committee. Before we get started, I'll provide a quick run through of some housekeeping notices. While we are all well versed in terms of webinars by now, please do bear with us if we have any tech issues. We will do our best to minimize any background noise, but I apologize in advance for any pet or children or even telephone related interruptions. And lastly, but importantly, you will be able to ask questions in the text box, and we will of course do our best to answer as many questions, and where appropriate, we will answer questions in long time if we can. So as you'll be pleased to hear, I think that's everything from me at the moment, and I'd now like to pass the floor over to FREYA. FREYA, thank you very much, and over to you.
Thank you very much, Joss, and thank you for joining us today at this webinar. I'm going to just start the slides now for the maritime sanctions webinar. Let me just see if that comes up on the screen now. That should all be visible for you. So as Joss kindly introduced me, my name is FREYA Page. I'm Head of Guidance and Engagement at OFSEA. For those of you who might not know much about OFSEA, I want to start just a little bit basic and just introduce what we do, who we are and why we do it. OFSEA was implemented in 2016 by the then Chancellor George Osborne to ensure that financial sanctions are properly implemented, enforced and understood in the UK. We have a remit to ensure that we license sanctionable activity, also to investigate breaches of financial sanctions, and also we provide guidance and industry support where it's needed as well. Financial sanctions, of course, are really important. They're a big foreign policy tool for the UK, and more so once the UK will start to lead the transition period, which we'll talk a little bit more about coming up. Financial sanctions are really important to help coerce, to change actions, to deny certain access to finance for some actions, and to signal disapproval. It's a very important political message to protect assets that may have been misappropriated, and some of these regimes a lot of you will be very familiar with, such as in Syria, Russia, North Korea, and of course some of our counter-terrorism regimes as well, which we have in place. Our financial sanctions, of course, are implemented across the globe, a number of regions, which of course a lot of you will be very familiar with, that come into territories where a lot of your business and a lot of your work will see some crossover. You can see there that from the Foreign Office, which was produced, I believe, back last year, but just actually the number of regimes that we have in place that are subject to financial sanctions and the number of designations as well. We also have that list on OFSEA's gov.uk website, where you can see the consolidated list of financial sanctions, the number of people and entities that are subject to financial sanctions as well, and I will give a link to that a little bit later on. So what does OFSEA cover? So we ensure that those financial sanctions are implemented and enforced against those with a UK nexus, and that's really important, and that is one of our big differences between UK OFSEA sanctions and that of OFAC and the US. Unlike the US, we don't have extraterritorial reach, for example, where the US will still be able to implement sanctions and enforce them even when people use and trade with the US dollar. The UK doesn't have that. But we do ensure that our sanctions are implementable and enforceable where there is any UK nexus involved, and that could be such as a UK company working overseas, any transactions that are cleared in or through the UK, for example, using a corresponding bank, any actions overseas that are directed from the UK, and any actions by a local subsidiary of a UK company. So there are quite some, quite important sort of distinguishing factors there to take into consideration, because it's not just within the UK, it's also a lot of those other sort of related factors as well. So it's very important to, when you're thinking about your due diligence and your risk exposure within your particular service that you provide and your industry, what exposure you have to the UK and that sanctioned entity as well, and where that could bite. As I mentioned just before, we have our consolidated list of financial sanctions on our website. When you go onto these lists on our website, you can actually see all the different regimes where the UK has financial sanctions implemented, and whether that's directly through the UK, whether it's EU current regulations, or whether it is UN as well, and of course our CT regimes as well. You can have a look. We have a fuzzy search function on there now as well, so you can have a look for any individuals or entities that you may be dealing with as part of your due diligence checks that you should all be undertaking. As I said, there's two lists on our website, one of which is the consolidated list for asset freezes, so anyone who has had their assets frozen via sanctioned regulations, and also one which is to do with investment bans, which is more specifically in relation to Russia. So do have a look on there. That's a little snapshot there of what our consolidated list page looks like, and a link there as well if you wanted to have a look and go on to that. So what do you do if you think you're dealing with a sanctions target? This is, of course, part of that due diligence and part of what we expect, which underpins the Maritime Guidance that we released this year. So we, of course, have some expectations about what we would like industry to be doing. First of all, checking, are they on the OFSEA consolidated list? Have they been listed by the UK, the EU, or the UN? Asking for more information, so making sure that you know fully the person that you're dealing with, their companies, and any subsidiaries that they may be working through, and of course ownership and control. Now this is something that we may well have questions on later, and it's something that always comes up with OFSEA when we talk about due diligence and our compliance and enforcement as well, and that is how far is enough due diligence, who really owns that company, who controls it, and of course if you're unsure, making sure that you contact and reach out to OFSEA. It's important at this point to just remind everyone that we can provide guidance, but we cannot provide legal advice. So it's very important that where you may be unsure and that you have some concerns about somebody who might be sitting behind that payment chain, or that sort of line of business, you might want to seek independent legal advice there as well. If you are dealing with somebody who you suspect to be involved in sanctions, then it's very important to inform OFSI as soon as you are made aware. And then to obviously cease dealing with any funds or economic resources and making them available to any designated person. And then, of course, you may need to seek a license to continue to do business with them, but of course only once conversations with OFSI have taken place. So in terms of that compliance and that due diligence, this is something that we think is really important that all businesses, whether in maritime or other sectors, should, of course, bear in mind is considering exposure to sanctions, particularly this is more important for obviously for the maritime sector, given that international exposure, but checking out really who your clients are, who they're working for, or who may be the ultimate recipient of those funds or goods. Making those reasonable inquiries, so that could be at onboarding, and obviously throughout that sort of relationship that you manage with your clients throughout their time with you, throughout their contract, making sure that you're always aware of those businesses and their relationships as well. And of course, staying up to date with sanctions policy. Now you can do that through OFSI. We operate a subscription list where you can sign up and you can get e-alerts on all of our updates to sanctions regimes and designated persons, and of course any updates to our policies as well. So moving on to our guidance. So as a lot of you will have seen, our guidance came out in, I believe it was early July this year. Contrary to a lot of people who thought that this was a quick knee-jerk response to the OFAC guidance, this was something that had been in sort of draft form and we'd been working on for quite some time. It was just sheer coincidence that they came out within a month or so of each other, as the US had obviously revised its advisory and put that out back end of May, I believe it was. So in our maritime guidance, it was very important for the UK to put something out for the maritime industry, given that it has such a large sort of holding of maritime insurance and businesses working out of London, particularly in this sector. We know through our stakeholder engagement that the OFAC advisory was quite prescriptive, and it was causing some challenges for industry and business, and it was overdue that OFSI needed to, certainly as part of its maturity, as it's been sort of starting to work really heavily with industry in across lots of different sectors, to put something out in the maritime space. It covers within the document illicit practices, which we know are not always the case. They are not always illicit in themselves, but they could be used and circumvented to enable an illicit practice. So please, when you're reading this, they're not prescriptive measures to say that things such as AIS, for example, means that something bad is going on, but it could be a reason. It may be a reason for you to look a little bit further into any instances to work out if there's anything naughty going on there. We wanted to give some overviews on the regimes that we are enforcing as well. So we've given overviews to Libya, to Syria, to Iran, and to DPRK as well. We think it's important to make sure that those operating in these very high-risk jurisdictions understand a bit more about why those regulations are in place and what the restrictions actually are and what they mean. It's quite common that we will put out regulations. People don't always read through the tons of paperwork and things online that we upload on them. So it's quite important to make some sort of bite-sized piece of information that will easily accessible for industry to understand the background and why these sanctions are important and what that risk really is to this industry. As I mentioned before, we've put something on ownership and control as well. This is particularly in relation to regimes such as DPRK and Syria, where you do often have layered structures, and it can be very difficult for industry to really understand who they're actually dealing with. So we've tried to bring out that ownership and control, which already exists in our general guidance document, but we wanted to make sure that it was really laid out clearly here as well. Our general guidance document is available on our gov.uk page as well. It's obviously a lot more detailed than the Maritime Guidance, and it covers a lot more issues in relation to financial sanctions as well. But we wanted this to be, like I said, accessible just specifically for the maritime industry, and hopefully that we've taken some of the headlines that we think would be quite useful and sort of important to make sure that you're aware of. We talk a bit about due diligence as well, the expectations that OFSI sort of has for industry. We don't want to be prescriptive with our document. You guys are the experts on that. We don't want to tell anybody how to do their business, but we do, of course, want to make sure that the sanctions are implemented and enforced appropriately. So we do have some sort of expectations on what that due diligence should look like, and what we think would be reasonable for due diligence if, for example, a suspected breach was reported. What do we want to make sure that you guys are doing as a matter of course, and of course what we can do to work with you to ensure best practice as well. We also go on to talk about enforcement. It's really important, certainly more so than ever, since 2017 when we got powers under the Policing and Crime Act in 2017 to impose civil monetary penalties for breaches of financial sanctions. This was quite a hot topic and still is, particularly this year after we imposed well over a £20 million fine on Standard Chartered Bank for breaches of sanctions. So it's certainly something that's getting a lot more attention as we work our way through sort of breaches and cases that we have been investigating. So it's really important to understand what the risks are should any sanctions, financial sanctions, be circumvented or breached. It's very important as well to make sure and the industry understand that we do look at these cases on a case-by-case basis, and we do take into account factors such as, coming to us early, letting us know if you think there may have been a problem, early disclosure, and of course letting us know what you've done in order to sort of mitigate those issues, and what you will do going forwards as well to ensure that doesn't happen again. Penalties can include anything up to £1 million or 50% of the total value of the breach. And of course, there is up to 7 years on indictment as well. So they can be quite heavy fines depending on the behaviour, of course. And with that uplift, of course, there's that expectation that we want industry to make sure they're complying, to make sure that we can sort of ensure that business and industry doesn't get caught by those enforcement of sanctions. We also provide a section on further reading. A lot of the stuff that we've written on in our Maritime Guidance document will not be brand new. You will have probably already seen it in the UN Panel of Experts report. We've also provided links to the OFAC advisory, the revised advisory, and links to our colleagues at Department of Transport who will be speaking shortly as well for any specific transport inquiries. So it's very important to look at this piece in the round. We're very conscious that the UK putting something out on maritime with the US as well, two very different pieces. Once you get into it, like I said, we try not to be very prescriptive. We try and just be very open. It's more sort of for information, the facts, here's the regime, this is kind of our expectations, but do with that what you will. Just stay within the sort of the confines of the law. So we try and be a bit more sort of open about it. And we hope that obviously will go on to further reading and understanding where those differences lie between US, UK, and potentially EU as well. So as I mentioned before, other guidance document pieces that you can get from us. So we have our general guidance document, which was last updated only in January this year. That was, of course, in light of the upcoming transition period, which ends at 11 PM on December the 31st. And we have updated and enhanced our sections on ownership and control, reporting obligations, exemptions and licensing, and our compliance and enforcement. We also have several other guidance documents on our webpage, including some monetary penalty guidance to help you understand further the processes and the requirements there, and also some sector-specific guidance, our most recent one being on Russia as well. We've got general guidance already on our website, which is updated in terms of what the expectations will be post-transition period and highlighting any changes from what we would have done before to what we will be doing from January onwards. And this is the most important bullet point here, is that if you think something is missing, or if you would expect us to go into a bit more detail to help industry, then please let us know. All of our documents remain live documents. We update them frequently, and we really want to make sure that we have feedback from industry, because you guys are the ones that are going to be reading it, using it, and implementing it. So if there are any problems or issues or questions or other areas where you think we should be exploring and really drawing that out in our guidance, then please do let us know, and we'd be really happy to work with you to see where we can expand our guidance in that. So again, here are just some links. I'll leave it on the screen just for a moment for you if anybody wants to make a note. Although I'm sure if I speak to Joss afterwards to get these slides circulated, that wouldn't be a problem. So you can, of course, always email us at offsea@hmtreasury.gov.uk for any questions, whether that might be to ask about any sort of, potentially designated persons you may be dealing with, or if you want to report a suspected breach or to request a license. And that subscription link there as well, if you want to get our e-alerts as and when they're published, and we usually have a few a week with any small updates, additions, and amendments to our consolidated list as well. We also operate a helpline. So on 0207 270 5454, we can take questions over the phone, and we have a team that can help as much as they can. And of course, a link there at the bottom to where all of our guidance documents are, including sector specific. We do have guidance there as well for NGOs, and a quick guide on sanctions as well. So that's a bit of a gallop through not just the maritime guidance, but also what OFSI does, and why we're involved and we're working towards developing this maritime guidance as we go forwards and as we leave the EU. Well, as we've left the EU, but as we go forwards into January. So if there's anything else we can do to enhance that and work with business in a better way to ensure we're providing a better service, then please do let us know. But I will, with that, stop the presentation. I think I'm good for time, and I will hand back over to Joss. Thank you very much.
Freya, thanks so much for that. And, I think one of the main rationales for doing this webinar, and perhaps I should have said this at the beginning, is to ensure that the market is aware that, OFSI are very willing to work with us and understand that a strong and proactive dialogue with the shipping industry is incredibly important when formulating shipping advisories, and also in terms of having a proactive dialogue to explain what the advisory does, and perhaps more importantly, what it doesn't do. And thank you for that, a really interesting overview, not only of the shipping advisory, but of OFSI's work in general. I'd now like to pass over to Mark from the DFT, who will explain a bit more about transport sanctions and the work that the DFT are doing in support of the advisory. So, Mark, I'll hand over to you. Thanks very much.
Thank you very much, Joss, for that introduction. Good afternoon, everybody. I am Mark, so I head up the transport sanctions team here in the Department for Transport. And we are relatively new to the sanctions world. Transport sanctions as a concept has been managed in government and with the FT, and it has been in the last sort of few years, and since the publication and the passing of the Sanctions and Anti-Money Laundering Act, that the transport sanctions team has become a specific responsibility within the Department for Transport. And it's my pleasure to be speaking to you today on that subject and to introduce this relatively new team to this group. As Joss quickly mentioned, I'll be briefly talking today about two topics. So I'm going to just quickly introduce this specific concept of transport sanctions, and also kind of my role within and our team's role within government-wide sanctions and the maritime and aviation sanctions that exist. And I'm also then going to take a couple of moments just to talk about how the work of my team, DFT, operate within the sanctions world in government, and how we support this piece of guidance. So as I talk, I'll be using the phrase transport sanctions, which refer to what DFT have lead responsibility for and where our expertise lie in the shipping industry as a whole, as opposed to sanctions that relate to the transport sector, which then encompass a whole different area of expertise where colleagues such as FREYA, OFSI, and other departments lead on. So having made that distinction, the areas that transport sanctions kind of covers, as I've quickly mentioned, relate to maritime and aviation, because as we impose sanctions from at the UN level, EU level, and now UK autonomous level, these are the areas that are aiming to have the effects that FREYA touched upon a moment ago on having an effect on that behavioral change, if you like, in the regimes that we look at. Currently, transport sanctions, or specific transport sanctions, are applied in 4 regimes, which are North Korea, Libya, Syria, and Russia. And although the specific prohibitions and restrictions that apply in each regime differ from one regime to another, and I always stress it's very important, if you're interested to know what those exact restrictions are, is to look at the guidance and the statutory implement that applies those instruments. Sorry. As a general theme, transport sanctions covers the movement, the registration, and the use of ships and aircraft in their use for enforcing sanctions. So in enforcing those restrictions, we work very closely with the Maritime and Coast Guard Agency, who are obviously the lead experts in all things maritime, and as well as the UK registrar, who control the registration, and also in our interest, the potential deregistration of ships that we may have an interest in. So just to give a quick example that kind of relates specifically to the maritime sector, and I tend to use the North Korea as our exemplar because it's quite an extensive regime, as you may be aware. Any ship that we may find that have been registered in North Korea, or has links to North Korea, is, as we know, prohibited from entering the UK. And the DFT's role in that would be to direct a ship that may be sailing past the UK or UK waters away from the port to enforce that prohibition on port entry. Or equally, and I'll touch on this in a moment, if we had an interest in bringing that ship into port in order to carry out further enforcement, then DFT would be involved in that side of enforcement as well. So that's the kind of example of how we get involved in kind of maybe looking at the movement of ships within the UK or around the UK, and also where there is a UK connection anywhere else in the world. So moving on to the guidance itself, which is our main topic for today, and also where my team and DFT's work fits into this. The way I kind of think about this is that transport is often seen as a facilitator or a means by which other breaches can occur or can be committed. So, for example, as we know, transport ships especially are used extensively to move around 90% of the world cargo around the globe, and therefore our restrictions on movement and other things would try and help the enforcement of other departments where there are potentially restricted goods on board those ships, or even if there are travel bans and there are people traveling on board ships who would not normally be allowed into the UK, we can also try and have an interest in those ships too. And therefore, as you can see, we have a close relationship with our colleagues in OFSI and also in trade, obviously in the Foreign and Commonwealth and Development Office, where there are lots of areas of crossover whereby transport would take an interest in how that ship, the movement of that ship or the registration of the ship, potentially with a view to taking action against the goods or people on board that ship. In relation specifically to the guidance that we're talking about today, FREYA's touched upon some of the illicit practices that are included in that guidance, and has some of those practices we're well aware of, such as ship-to-ship transfers, obviously include ships which we would take an interest in, and if we had enough kind of evidentiary threshold was crossed, we could then take action against that ship and ensure that it is not able to enter UK waters, for example, UK ports, and then the consequential effects of that in receiving services from the port, for example. And equally, we have constant interest, as you'd expect, in UN designated ships, and we can certainly help enforce lots of those areas, as I mentioned before, on the movement and registration of such ships, to help enforce and support how the guidance supports the UK's efforts in the transport sanctions world. So just to kind of conclude this short presentation, we were given the pleasure and the honor of writing a short blog by OFSI back in August, I believe it was, not long after the guidance came out, just to introduce what transport sanctions are and cover some of the themes I've spoken about today. And that can be found on OFSI's gov.uk website. So if anyone's interested, they can go there to take a quick look. At the foot of that blog is our email address, our team email address for the transport sanctions team in DFT. And so I wanted to kind of just mention that, because obviously this is an opportunity to reach out to the industry, to reach out to colleagues on this in this event, as we're very much happy to hear from you, to open a dialogue, as Joss said, a very proactive dialogue with everybody, and to ensure that we are working together towards the same goal, which is the effective compliance and enforcement of these transport sanctions and these regimes. And that brings me to a close, and just very much looking forward to the Q&A to follow. And I'll hand back to Joss. Thank you very much.
Mark, thank you so much for that. And again, I think it's really interesting to understand that the work that the DFT is doing, how it intersects with OFSI, and also, and maybe this could be the subject matter for another webinar, but the role of the Maritime Coast Guard Agency and how the DFT engages with those, and how the industry could potentially learn more and engage more proactively in that process as well. Now, we didn't have a technical issue earlier. You may have thought we did, given the appearance of all of the blank spaces in front of your screens. I was just building anticipation, ready for the panel discussion. And I'd now like to very much welcome all of the panelists for the seminar piece of this webinar. So if you could all sort of switch on your cameras and turn your microphones on. As I said earlier, we're very pleased to have, well, we know Mark and FREYA, but we're very pleased to have Daniel from Holman's, and Mike from the North Group, and of course Simon from Willis here. And I think we're going to explore the shipping advisory in a bit more detail here, but also the wider sanctions environment, and look to answer any questions that may come from the floor as well. I think in the first instance it would be, and FREYA did this to a certain extent, but it'd be interesting to get the views from the industry panelists as well. Whether it be OFSI or OFAC, I think we need to clarify exactly what an advisory does and what it does do. I mean, i.e., to what extent, if any, is an advisory an enforcement mechanism, or is it simply advising the industry what it needs to do in terms of its KYC? And Daniel, perhaps you'd be a good person to kick off with in terms of that question.
Yeah, of course. I'm happy to sort of introduce the discussion on that. I think from my perspective, and the advice that we've given to clients, and clients are coming to us to talk about the advisory, is that the advisory reflects the legal position as it stood. So it's not changing the law. It's merely setting out what the law is. And equally, it's not an enforcement tool. One of the things that presents a big challenge with the OFAC advisory is that includes within the list of that advisory vessels that have engaged in sanctionable activity. And therefore, to some extent, from the OFAC perspective, it's a bit of a soft enforcement tool, because there are a number of ship owners and vessels which are having to deal with negative consequences by virtue of being included in the OFAC advisory. And it was very pleasing to see from the OFSEA advisory that it doesn't do the same thing. I think the only thing I would say, to slightly colour that, of course, is that the industry should be looking at the advisory and recognising that, yes, these are recommendations as to what the industry should be doing, but it seems to me, and grateful for FREYA's input, but that those who don't do the things that the advisory recommends may well see the advisory used as something of an enforcement tool, because essentially this is saying to people, these are the sorts of things we expect you to do, and if people don't do that, then it makes it easier for an agency to say, actually, we had indicated the sorts of things we expected of you. So I think people need to read through the guidance with a pretty close eye and see what guidance it gives. And likewise, we've seen that from the US in terms of US advice on what should be in a compliance program, or US guidance in terms of due diligence.
Freya, have you got anything to add there from Daniel's question?
Thanks, Josh. Just to really sort of support what Daniel has said, it's absolutely true. It's not a prescriptive document. We're not trying to use it as an enforcement tool, but it is there for open reading for anybody who wants to. And we sort of would expect anyone operating in this space, would be aware of financial sanctions and the risk that exposure brings to the sector. So it's a useful piece of information that we would like to see people using. It doesn't tell people, like I said before in my brief presentation, it doesn't tell people what we want them to do. We don't tell people how to do their jobs, but it's a list of considerations basically, and that bit of sort of background to why they're in place, why they're important, why it's important for UK foreign policy that these sanctions are in place, and of course it then displays on a bit of sort of the enforcement side, because it's important that people are aware, of course, what those repercussions could be. So it's really just to provide a bit of background and just hopefully provide industry with a bit of context on UK sanctions policy.
Yeah, thanks for that, Freya. And Mike, I should have said that, of course, you are claims director at North, but you're also chair of the sanctions committee at the IGA, and I think it's probably more wearing that hat that you're with us today, perhaps. I think it's interesting to look at this, and of course, much has been made of the enhanced role that is expected from service providers within the industry when it comes to sanctions enforcement and intelligence in regards to sanctions evasion. How does the IG feel about the OFSI advisory? And given the similarities with the OFAC advisory, to what extent could this potentially be perceived as an additional layer of red tape?
Well, thanks, Josh. Yes, look, we in the group and as clubs individually, we very much welcome guidance provided by regulators. It gives us an understanding of what their thought processes might be, and also what their expectations are. We also welcome engagement with the various regulators. That I think helps make these guidelines more effective. If I would say something, I think that some of the mistakes from the US advisory are being repeated. We do have issues with the emphasis that's placed on things like loss of AIS signals, AIS switch-off causes, use of STS operations, when they are used as compliance tools. They do form part of a suite of measures that can go to make an effective compliance program, but generally I think regulators on both sides of the Atlantic are just placing too much weight and emphasis upon them. I think the most effective compliance really is KYCC, and knowing your customers, trading partners as well, and having that ongoing dialogue. Shipping is not a big industry. Even a club of North sizes, what we're 12% of world tonnage, still only about 400 members. We know them all. We know what they're doing. We know what the trades are involved, and that is actually the most effective form of compliance from our point of view. As to the additional layer of red tape, yes. To the extent that we're getting this sort of distraction on AIS, which we've always used, it has a role to play, but it has been something of a distraction over the last 2 years. It's perhaps best if I illustrate that by way of an example. You may get a press report that publicises that a tanker insured by North has turned its AAS off in the Persian Gulf, and that's now in the public domain. Now, if we say we know and our cover is terminated, that puts us in trouble with the UK government, because it's, we're complying with US sanctions that have been reimposed following US withdrawal from the JCPOA. If we say nothing, then we've got the US hopping up and down and potentially putting us out of business because we're providing insurance to vessels that are breaking sanctions. And the reality is, in all of this, because a club like ours has been using AAS for a long time anyway, is that we probably already know about it. We probably were already dealing with it. We probably already decided whether we're covering it or not. But this preoccupation with AAS tracking is quite distracting, and it's using up time in managing it and managing the conversations externally. But yeah, in summary, I don't want to appear too grumpy. We do very much welcome the guidance and the support that these sorts of guidances give, and it certainly provokes a dialogue. And I think FREYA has been very open in welcoming that discussion going forward, and it gets better. The more we talk, the more effective these things become, the more unlikely it is that we end up inadvertently breaking sanctions. So good in general.
And Simon, I mean, given your position in the market, dealing actively with brokers and cargo interests, but also the underwriters, particularly on the hull and the cargo side, I mean, do you mirror Mike's views? I mean, I know that there was a lot of not anxiety is probably a bit too strong, but a lot of questions around the OFAC advisory when that got released. And was there a sort of a collective sigh of relief, so to speak, within the market when people got to see the content of the OFSI advisory and the potential issues that that's created for you?
Yeah, thanks. I think the collective sigh of relief might have been sort of overplaying that one a little bit, but I think actually when I having sort of been through and the OFSI advice, the most encouraging bit I see from the start of it is the acceptance or the realization that when we talk about maritime, we're not talking about just those people that own ships and the operation of them, but it's that whole suite of and a weight of services that sit around the whole of the maritime industry. And in fact, OFSI have recognised right at the start, that it's that insurance and law and that sits critically around that one as well. My real concern, as on behalf of my clients is and a lot of the points that Mike's touched on there as well. It's it goes into this sort of question around the demonisation of shipping. And the use of shipping as quite powerful tools by certain sort of states, regimes, and everything else to sort of to look at other issues. Particularly if you look at moving on to the AIS point is is a really interesting one, in that we take one of our clients, and it's something we've been using the AIS technology to actually look at sort of premium calculations and other areas as well. So we've been tracking a fleet of 40 tankers for the last 12 months for this client. And by the way, this is a US listed client as well, just to give some perspective. It's not from a less visible sort of regime as well. In the last 12 months, this one client has had 10 tankers that have gone more than 36 hours with no AIS signal, and one tanker that's had is currently somewhere around this in the South China Seas, or so we hope, that's been out of signal for the last 21 days. And there's all sorts of reasons for that, and that's not so. On the face of it, something seriously wrong is there. We know that isn't the case on that one as well, but it's very easy then for people to get caught up in that situation. The second idea, and I think FREYA described how OFSI differs from OFAC in terms of that sort of extraordinary territorial reach that OFAC have, but because of that, unfortunately, if you look at so many of the counterparties that we have in there, is that nobody's looking past OFAC, and that's the real challenge on that one as well. So because of shipping again is a US dollar business. So much is being caught up in that, and the OFSI issue, which is on the OFSI support on that one as well, and the guidance, great, and really really important. And again, going back to this whole point about the realization that shipping is so much more than than the ships that that operate in there as well, the industry or the maritime industry that sits behind it. But unfortunately, so many of the people that we're dealing with are just getting caught up in with OFAC and actually and as Mike mentioned quite incorrectly and against against UK and also EU law as well, acting incorrectly because they're applying rules that shouldn't apply in the individual contracts, including and I questioned the chairman of Lloyd's around this, or the CEO of Lloyd's around this one last week. The Lloyd's bureau arrangements, the handle of claim and premium is outsourced to a third-party organisation who are US owned, and it is restricting the payment of both premiums but also valid claims to clients, and because of they're operating under the wrong set of rules.
So I think you touch on a really interesting point here, and that's the scope that sanctions has well beyond just the ship owner or the charterer, and particularly in regards to the OFAC sanctions advisory and the number of stakeholders involved in a single shipping transaction. And I suppose just to double down on that as well, the fact that neither OFAC or OFSI provide a one-size-fits-all compliance mechanism, if you like, which is totally understandable. What sort of tools need to be deployed in terms of KYC? And of course, we hear an awful lot about big data and compliance platforms and all the rest of it. And of course, a number of those providers are Maritime London members. But to what extent do those platforms provide the solutions? And perhaps I'll open that up to the whole of the panel. But Daniel, you might be a good person to start there with that question.
Okay, will do. Thanks, Joss. I mean, I think you're right. I think the fundamental question that we get asked a lot, and it may be in the context of a particular voyage, or maybe in the context of a transaction or disposal of a vessel or what have you, is about the extent of due diligence that needs to be done. And within the industry, things move very rapidly. People are looking to fix cargoes promptly. They're looking to get vessels engaged, and therefore it's under time pressure. And I think you're absolutely right. One of the concerns is, first of all, how can I rely upon my counterparties in order to avoid replicating searches that they are doing? How can we get things done as quickly and as efficiently as possible? But I think the flip side that often presents a challenge is that, because as Micah said, it's a relatively small community, people will be reluctant sometimes to share information because it's commercially sensitive, rather than because there's a particular sanctions related reason not to share that information. So I think one of the challenges around using big data is, how do we get to the point where we can avoid duplicating information, but without having a too porous flow of information where the information might be commercially sensitive? And I think that's still a challenge for me at the moment. I think everyone would like to see a single set of searches run on all aspects of the transaction, that everyone who is involved in the transaction could pick up, and we could have some sort of kite marking. I suppose if you think about some of the food cargoes that have been dealt in the past, there's a bit of that through some of the various different payment mechanisms. But I think that's the challenge, is how do we share the information we want to share while still allowing people to maintain the commercial relationships that they've got in a difficult market.
Yeah, it feels to me, Daniel, as if you may be advocating some sort of sanctions compliance blockchain or something along those lines. I've dreaded to use the terminology, but it feels a bit like that could be the direction the market's heading. And FREYA, from your perspective, obviously you have sanctions experience far wider than just the maritime sector. Let's say the financial markets, do they use any sorts of compliance tools similar to that Daniel has just sort of described?
Hi, Joss. Yeah, so the financial institutions, of course, are our main sort of implementers, and we work with them quite extensively, and we have done for many, many years. In terms of their sort of due diligence, they rely a lot on third-party platforms and companies to do a lot of that due diligence and screening for them. And they have teams that sit behind it that do a lot of the sort of, if anything pops up on their screens that are flagged, they will have compliance teams to sort of do a lot of that sort of due diligence and extra checks for them, and potentially even for some of the bigger banks, some legal teams as well to get some of that advice. But it's one of those things where we see it a lot, and I think having spoken to you previously, Joss, around this issue, and we get it a lot with other sectors such as the NGO sector, it comes down to cost as well, a lot of this, and you will always see the bigger companies having the more resources, the more money to put into conducting extensive due diligence, and the ones that don't, that are a lot smaller, are inevitably always more at risk because they don't have that resourcing, the staff and the funds that they can, which is one of the reasons why we've tried to make, for example, from OFSI's point of view, from OFSI's perspective, we've tried to make our consolidated list a lot more accessible, a lot easier for people to sort of to try and like I said, mentioned that fuzzy searching earlier. So to try and help businesses and much smaller companies and individuals try and do some of those checks on their own, where they don't have thousands of pounds to pay for sort of yearly subscriptions to certain sort of data scanning agencies, but it's always one of those things that we try and work with industry to provide as much support as we can, but it always, sadly, with a lot of these things, comes down to third-party software and funds.
Yeah, I think you touched on an interesting point there, Freya. And when we did have that initial meeting, I think it was something that the industry was keen to impress on OFSI, and I'm sure you're already aware of this. Is the cost and the time that is already taken in regards to KYC and the importance that the sector puts on it. But Mike, do you have any further things to add here in terms of that tracking of the compliance framework, I suppose, and how you can be sure that all of the stakeholders are not on any lists, etc., etc.?
Yeah, thanks, Joss. Well, look, I'm sure all the clubs. I mean, if it moves, we screen it. So I mean, we screen pre-inception, we screen pre-contract, we screen pre-payment. The group clubs are reasonably large businesses, and they certainly invest in that sort of software. But all these things fit within a whole matrix of measures, and I come back to, and it's actually the stuff that doesn't get seen by the regulator, which is often the most effective. I come back to simple knowledge of the industry and knowledge of your members. The Grace 1 was touted around the market for quite some time before it was identified as an Iranian-owned ship. No IG club picked it up. Why not? Well, because its ownership was obscure, and I'm sure they were offering very good rates, but there would have been a nervousness about that. Other things that really work well for us are simple training. If you have a well-trained executive staff who are engaging with the ship owners, then they will be able to identify and escalate matters very effectively. Screening throws up bits and pieces. Facts come to light during the handling of a claim. Queries from ship owners. All the clubs have big resources when it comes to assisting the members with inquiries, and there's a lot of raw intelligence that comes in from ship owners who are curious about somebody. They're not sure whether they should be doing business with them. They're concerned about the particular trade. So we get an awful lot of information like that, and through that way we avoid either insuring, and we help our members avoid a lot of sanctions breaches. So data does have a role. I think I can't remember who said that there are, I think it's Daniel said, there are constraints on the extent to which it can be shared. And we in the group are very mindful of the fact that if we say we are not insuring you and publicize the reasons because we think, and it's only ever we think, it's very difficult to prove a sanctions breach because we think you're breaking sanctions, that puts that operator out of business. And that's a problem when you have a market position like the international group. So sharing and publishing data is a difficulty for us, and it's very much left up to the individual clubs to work to the same level, to the same standard, to provide each other with confidence, because obviously we provide insurance collectively through ourselves, and then and into a reinsurance program. So we have to have confidence in the standards that we all employ.
And just to stay on that sort of sharing of data point, you know, Mark, from a DFT perspective, and obviously understanding that the DFT as a department are relatively new into this field, when it comes to the sharing of data and engaging with the market, if you do have any concerns in regards to a particular vessel, is the Maritime Coast Guard Agency the conduit for that information, or is that a role that the DFT is taking upon itself?
I would say it's both, actually, Josh. So we're working hand in glove with the MCA on all of these issues. The MCA, obviously, the kind of, I'd say, the front line, if we call them, because obviously they work through the port and harbour authorities, plus the registrar. So once we started, you know, tackling this in practice, I think more often than not, the MCA will probably hear things through their contacts and through their port harbour authorities, registrar, and others, who will kind of come via us, or vice versa. But I think just sort of touching on that point about big data, and I think it's sort of, this is sort of half why we exist as a team in itself, because we can just help with that conversation as well. And I think the kind of classic question of big data is great, but context is better. And I think once you start to understand how you can use that data efficiently and effectively, like we were talking about before from Daniel's point, and provide that kind of that contextual overview, I think that's where we can help as well, along with the MCA, to try and help members and other people sort of understand that better if we can.
Yeah, thanks for that, Mark. I think again, you know, that's a useful sort of overview in terms of how the DFT and the MCA are looking to engage with the market. And you know, you led on to an interesting, potentially an interesting point, and this might be a how long is a piece of string question. And I understand that the government may be slightly anxious about delving into these rather murky waters, but you know, we haven't got much time left, and I think maybe as a closeout, obviously, you know, Brexit negotiations are ongoing. You know, we're fully aware as to the difficulties or not that are taking place. You know, who knows? It may all be a ruse, and come the next couple of weeks, a deal will all be agreed, and we can go away happy. But you know, particularly from an industry point of view, I mean, first of all, do you feel that it's likely that close alignment will be maintained with the European Union once a deal is agreed or not? And if the latter, and if the UK you know, goes in its own direction in terms of sanctions enforcement, what could be the potential consequences for the industry? Simon, maybe start off with you on that one.
Yes, thank you, Josh. Yes,
rather
yes. How long do you say we had left? Yes. No, I think, you know, I think it goes back to my, you know, my frustration, you know, that already exists with, you know, with OFSI, with their NOFAC, and you know, and if you look at us based in, you know, in the UK, looking for clients that are based outside of the EU, placed with insurers on a global basis as well, and you have to look at, you know, there's layers and layers of you know, of complication when it comes to sanctions regimes and sanctions touch points as well, and the regulation of that. And I mean, I think if you look proportionately of where the UK sits, you know, alongside, you know, as part, you know, as we transition out of the EU at the moment, and you know, I would expect that, you know, that there, whatever happens at the end, either on the 15th or the 30th of this month, that there will be an association. But you know, we as a, you know, but we operate as a global business and a global marketplace. You know, we have to have visibility on what's happening at global level. And if you look at the advice even that we have, you know, internally, and in terms of our sanctions regimes, it says UN, it says EU, it says UK, and it says OFAC as well, because they are the principal ones that have to guide what we as a business, and the due diligence that we have to carry out, and the foresight that we have to carry out with our business as well. And it is complicated, and there's the challenges is that I think one of the biggest problems, there's one with the international group on one side who are, looking after their mutual members, either people, they are their clients. If you go into the commercial environment, and once you start adding those additional complexities into that one as well, and requiring each and every person to look at those things as well, is that my huge frustration is that we are in the risk business, but it's much easier to say no than can I, or should we, and look at that one as well. And it's unfortunately these layers of regulation are only adding cost at a time when cost is being pushed hard to take, to be removed from all sort of areas of business as well. So that is a real challenge. I think it's the cry of 2020, Josh, and you're on mute. Yes, yeah.
There we go. I've lasted this long. Daniel, Mike, I was just saying, have you guys got anything further to add there? Daniel, perhaps start with you.
I think, so being brief, from my perspective, I'd agree with everything Simon says. I think what the challenge it creates is when we've got different frameworks which either have areas of overlap or have nothing in common and pull in different directions. So from my perspective in advising clients and clients' frustration, it comes when different rules are pulling in different direction. And it also feeds back into what we were talking about, everyone trying to share information and minimize duplication. If you suddenly have a transaction in which you have say a German ship owner, a UK insurer, and a US nexus, then you can't really share information about what the risk is, because potentially everyone's under a different risk framework. So I think that's where, from my perspective, if there could be a focus globally, it would be in having a single set of rules that we can all operate under. Now clearly that's not realistic, and that's not the world that we live in. But that's my sort of plaintive cry on behalf of clients. Perhaps not for myself, but on behalf of clients.
Well, Daniel, I think that's a great way for you to sign off, I suppose, with your vision of a utopian sanctions future. But Mike, have you got anything further to add? And then I'll sort of give Freya the last word.
Yeah, look, I mean, I'm very worried about this. Sanctions are overused at the moment. I'm supposedly an expert in this topic. I wouldn't even pretend to know the detail of US sanctions legislation, or the detail even in English law, EU law, and we've got other jurisdictions now starting to introduce sanctions too. And I'd leave people with this worrying thought: how long is the EU and China going to be prepared to accept US extraterritorial aggression? And that's what it is, extraterritorial aggression. I don't think the Chinese will for very much longer. So we will start to see the development of counter sanctions, countermeasures, really to undermine this attempt by the US to exert their foreign policy through the use of their financial system. And we already have with the blocking regulation, and that's a huge problem. And there are the other sanctions programs coming up, which are similarly going to cause European, not even necessarily European businesses, all sorts of difficulty. And the one plea at the end of this is that, when the UK starts to formulate its own independent sanctions policy from industry, it's going to be very difficult for us if the UK goes off on a completely different course of action, an independent policy which is not aligned with those of its major allies. So I'm very worried, and we will have sanctions coming in from China in the next few years, which are advancing their own foreign policy, and it's going to make global businesses like ourselves, going to make it very difficult for us to comply with all of those.
Mike, I think you've covered off some really interesting points of conversation there, and I think there's certainly a lot more that can be done in terms of trying to think about what the future implications may be of the enhanced use of sanctions as a foreign policy tool. But Freya and Mark, we really welcome as an industry the DFT and OFSI and Treasury's enhanced engagement with us. We think this is a really useful dialogue. and also, we totally understand that you guys are doing your very best to ensure that we understand the ways in which our current government is thinking. But Freya, do you have any last comments to sign off with?
Yeah, sure, Joss. But yeah, we're definitely trying to give industry the best and most latest information that we can. We are struggling also to keep up with changes and amendments as it all goes along. So we certainly try our best to make sure we're doing all we can to give you guys the heads up, because it's sanctions. Ultimately, the policy of sanctions sits with the Foreign Commonwealth Office, with also the FCDO now. So they are the ones that will really be the ones to decide how sanctions going forwards develops post December 31st. I think it's important to sort of to remind everyone that even at the point of when the UK went forward with for leaving the EU, there's never been a decision to stray that far away from what's already in place in terms of EU sanctions. We have tried throughout the the addition of SAMLA sanctions, the Anti-Money Laundering Act regulations, to stay quite closely aligned with the EU, and you can see that through the SIs that have been published already online on the Foreign Office's website, where you can see actually that the policy that underpins these regulations haven't changed, they haven't moved. In many ways, we are seeking to sort of deepen and clarify a lot of those regulations to hopefully make it easier for industry. And both Mark, myself, and other colleagues across Whitehall have been working with the FCO to help try and develop that legislation as we go forwards. And I think it's important to remember, I think we all agree that sanctions work best when implemented multilaterally. We don't see it in any way in anyone's best interest if all of a sudden you have America doing something else, EU doing something else entirely different, the UK doing something different, and then Canada, Australia, or whoever doing their own things as well. It just makes it very confusing for industry, and that's certainly not what OFSI's intention is. We don't want to make it difficult. We want to ensure that industry is protected as best it can. And that we want the sanctions and regulations that we do have, obviously, to be implemented and to make sure that we're all staying compliant. So we definitely don't want to introduce more hoops than need to be. And I think Daniel's idea of a utopian world where we're all sort of working from one sanctions book would be ideal. But I think definitely we are quite a long way off, and we'll see what happens with the elections in November. But I think certainly at the moment, the UK's position, certainly that we know so far, is that we are staying closely aligned with the EU. That will continue and maintain. There will be slight differences. I think it would be remiss to think that we would not have any divergences as we go forwards, just as the UK will have its own threshold for designations, which the Foreign Office will manage, and there may be some slight differences there in terms of meeting that sort of evidence threshold for designations that may come across their table, but by and large, I think we aim to remain close. We want sanctions to be implemented and worked fully, and that will only help, of course, if we remain close to our allies as well. So I think that's all from me. I think just in terms of trying to provide what assurance I can at this stage, certainly, and of course we will definitely do our best to keep industry up to date with any sanctions developments as we get them, because the next few months are going to be very crucial to UK sanctions going forwards, and of course to the ongoing implementation, and to help industry understand what those changes mean for them. So do reach out as ever if anyone has any questions, and hopefully we can do more of these and take on some more topics that we can help hopefully provide some clarity on.
Well, Freya, thank you so much for that, and thank you to the whole panel. I mean, first of all, I thought that was a really interesting appraisal of where OFSI is coming from, and the shipping advisory in particular, and how it's placed there to be able to support the market. As you say, one hopes this is the start of a collaborative and proactive discussion between government and the industry in terms of shipping and sanctions. We've touched on a number of really quite significant issues in this webinar, and it's hardly surprising that we've run 10 minutes over time. And I think there's a number of strands of conversation that can be picked up in more detail in fora in the future. But for now, I'd like to again thank you all for your time, and thank you to all of the listeners, and hope you all have a good rest of the day. So thank you so much all, and we'll be in touch with a follow-up email highlighting webinars in the future, and additional materials linked to this webinar in the not too distant future. So thanks all again, and take care. Bye bye.
Thank you.